Hello everyone, welcome to this channel. In this video, I'm going to show you how you can track all your investments using Google Spreadsheet and Google Apps Script. So this is going to be a two-part video. In the first part of the video, I am going to show you how you can format the data in a spreadsheet and how you can visualize your portfolio using Google Spreadsheet. In the next part of the video, I am going to show you what are the actual Google Apps Scripts codes that you need to implement in order to get the desired results. So as you can see on my screen, we have a spreadsheet titled financial investments. So in this spreadsheet, I have mentioned all the trades that I've executed from some arbitrary date, let's say 20th April 2022 till some future date, 18 September 2025. And these are all arranged chronologically, and these are actually given some types based on the type of investment it is. Let's say it's an equity investment or into a mutual fund, or it's an ESOP investment. Then in the remarks column, I'm mentioning the ticker name for the stock that I'm investing in. If it's a mutual fund, then I'm mentioning the mutual fund name along with some additional information like these exchange in which it was bought and the demat repository where it is stored. Similarly, if it's a mutual fund investment, whether it is a demat instrument or it's a statement of account SOA, if it's a direct plan or not. So all this different information I'm storing. Similarly, for the ESOP investment, I am mentioning the stock that I'm purchasing as well as the exchange from where I will be where the stock is listed and the type of investment it is. So there is some level of customization that you can do with the details here, but I have personally gone for this kind of approach. And whatever we put in this remarks for identifying each of these stocks, we have to be using the same pattern, the regex expression, to identify uh, which stock to take while calculating uh, the, uh, the unrealized profit and losses as well as the realized profit and losses. So here the quantity, we have to maintain it as a positive quantity if it's a buy order. If it's a sell order, then we have to add a negative sign before that. So it's a negative quantity. We are getting the amount, the quantity is getting deducted from our uh, account. Similarly, the rate is something arbitrarily taken. Uh, it is not a real value for the stock at this date. And similarly, the amount is also just the product of the date and the, sorry, the product of the quantity and the rate. Now, a couple of other housekeeping rules that we have to follow is, let's say some trade is an intraday trade. So we buy some stocks on that day and we sell, let's say, a part of the stock on that same day. So in that case, when we are selling the stock, which is let's say minus 25, we have to register that trade with the additional information of dash intraday. So when we are writing the script, the script will search for this parameter inside the regex expression to identify if it's an intraday trade or not. Now coming to how the portfolio will look. So here on in the portfolio, what we have is, let's say, the date from which to which we are trying to calculate the realized profit and losses, the type of investment it is, the stock name. So whatever name we have put here for each of these stocks, we have to put the same names here to track their current values as well as the realized profit and losses. And in the ticker section, we are mentioning the exchange from which we are going to fetch the current market price for this stock, and the ticker symbol which is identified with that stock. So these values can be easily obtained from Google Finance website. So if you go to Google Finance and search any of the stock, let's say if I want to search Microsoft stock, so I just type Microsoft, the Nasdaq stock, and you will have the information about the ticker as well as the exchange. So you will have to mention it in this fashion. the exchange, and then the ticker name. For mutual fund as well, if you search with the mutual fund name, you will also get similar information for the mutual funds. So let's say we search with HDFC FlexiCap. So we are getting the HDFC FlexiCap fund with direct plan and growth option. This is the current price and this is the ticker name, and you have to search it with this keyword. So the same has been populated here. So this is something we have to populate for each of the stocks that we have in our portfolio. And you have to be mindful that we don't have a space in between these two in, in between these two words, or rather after the colon. But if you just simply copy it from here, there is additional space here, so it may throw an error. Now coming to the time column, here what we are mentioning is the amount of time for which we have to hold this stock, after which if we sell it, it will be registered as a capital gain, as a long term capital gain. So if you sell it before that time, it will be considered as a short-term capital gain. So different investments will have different time for the for selling to get uh, to be considered as long-term or short-term capital gains. So here for the stocks that are listed in NSE, we are taking it as like simply 1 year. Similarly for these mutual funds, I'm taking it as 1 year, and for the, let's say, the ESOP that we have of Microsoft, I'm considering it as 2 years. But actually this information will vary for different stocks and the different investments that we have. Different mutual funds will have different kinds of time period for you to hold, so that after that if you sell it becomes a long-term capital gain. Now in the rate column, so some of the stocks that are listed in the foreign exchanges will we will be getting their price in foreign currency. So here I am converting the foreign currency into the equivalent Indian currency. So I need to know the exchange rate of that currency. So here in Nasdaq, Microsoft, so the currency is the return uh, for this Google Finance function will be in US dollar when we query the current market price. So I'm getting the current exchange rate for USD to INR, and which is coming out to be 83. For the other Indian stocks, the exchange rate is 1 because the current market price is reported in Indian rupees. Now coming to the current market price here, what essentially I'm doing is I'm querying the current market price of the Microsoft stock with the additional parameter of price, and I'm multiplying with the exchange rate for US dollar to Indian rupee at this date, and these arguments are passed into the Google Finance inbuilt function, and it will return the price of the Microsoft stock in Indian rupees. Now the additional if statement is because if I am having no quantity for this stock in my portfolio as of in between these two dates, then I will be ignoring this current market price. It will be simply a null character, empty character printed, so that I don't populate redundant information in this spreadsheet. So only the stocks which I am holding in my portfolio as of in between these dates, they will be only shown. The remaining rows will be all empty. The prices and the quantities, everything. Similarly, the prices, the current market price for the remaining stocks and the mutual funds are also queried. So you can all copy this formula. If you're watching this video, you can just write this formula in your spreadsheet, and it will print out the current market price of each of the stocks that you have in your portfolio in this fashion. Now the part of unrealized uh, quantities. So you will have, so in between these two dates, let's say 1st April to 31st August, from 2023 to 2024, you will have uh, you will be holding different stocks as of this end date 31st August 2024. So it will, in the unrealized portion of the spreadsheet, you will be having the stocks quantities which you are holding currently as of this end date. So I will, to avoid any confusion, I will just mention it as end date, and let's say we call it as start date. So the end date is 31st August, and as of this date I have 5 quantity of ESOP for from Microsoft, 97 stocks from Infosys, and 50 stocks from TCS. Similarly, 4.47 quantity for the HDFC Flexi Cap, and 172.85 for the Tata Small Cap. Now, if you see this cell, you will see some formula called get quantity. Now, this is not an inbuilt Google Sheet formula. It is something that we have written in our financial planner Google App Script code. So in the next video, we will see the implementation of the code, but this is just to get you started. So you're getting the different quantities for each of these stocks. Now you will also get the different so yeah, coming back to this, there was actually a small error that we had to fix. So if you look at it, so if you're getting this function here to get the uh, buy value for these 5 shares that you have, that you are holding as of this end date. So this function is also again a custom function that we have implemented in the financial planner, which we will again discuss in the next video. So you will always get the price for the buy value or the cost value of these remaining shares after applying the FIFO principle. So when you are buying some stocks and when you are selling some stocks, so the first stocks that you were purchased will always be the first one that will be sold. So it's always first in and first out. So after applying that principle, whatever remaining quantities is there, we have to calculate the buy value or the cost price of those quantities based on the prices those stocks were purchased on. So that is something that is implemented in the script. Next, you are having the column for the average buy value. So it is simply the average price of all the 5 quantities that we have, and similarly for the other tickers also. Next, we have a column for the percentage investment. So this is sometimes helpful to understand the distribution of your asset. So let's say I have invested total of 3,15,850 rupees into equity stocks. So how this money is distributed across the different stocks individually. So this is giving that distribution. It is simply nothing but the buy value divided by the total amount that is invested into each of these categories of ESOP, equity, and mutual funds. So the sum of these individual categories has to sum up to 100, and the profit and loss is calculated on the basis of the current market price for this share and the average buy value that you have, or the total amount that you have invested. Based on that, you can calculate the profit and loss for the shares that you hold in your portfolio as of date. And similarly, you can also calculate the percentage return based on the profit and loss and the amount that you have invested. Again, each of these cells has a if formula, so that if you don't have any quantity holding as on this date, then each of these cells will turn empty, so that you don't populate it with zeros and make it look clumsy. So you will only have the relevant and the important information for the stocks that you're holding. Now we are coming to the realized gains. So this is the case when you actually sell some stocks and you realize some profit or loss in the process. So this will be calculated for the time period that you mention here. So whatever stocks you have sold in between 1st April 2023 and 31st August 24, whatever stocks has been sold and what is the quantum of total profit and loss that has been realized in each of these stocks across each of the categories of profit and loss is actually registered in this section. So here also similarly you have a quantity for the stocks that have been sold in this period. So again, as you see, the ESOP's share has not been sold. Now if I go back to the ledger quickly, you can see, so let's say if I look at the ESOP, so only I have one row here where I'm just purchasing ESOP. It's plus 5 and some average price for the purchase. Again, this price is actually a dummy price that I've put. So and after that I have actually not sold any ESOP quantity. So it's understandable that you don't have any ESOP quantities coming up in the realized profit and loss sections. And since there is no quantity coming up here, so the formula automatically takes care of it, and you have entirely an empty row coming up here in the remaining cells. Yeah, again, a formula was missing in this cell, so I have put the formula. Now you see there's zero quantity that has been sold, and the remaining cells are all coming as empty. So there's formula fixed here, but you won't see anything coming up. So now coming on to the other stocks. Let's say I don't have any shares of TCS sold in between these two period. So I have a zero in the quantity, and similarly the remaining all the cells in the row are empty. I have sold, let's say, 58 shares of Infosys in between these time periods, and the buy value for these 58 shares is the total cost of purchase for these 58 shares, and the average price, and the total sale value of these 58 shares, and the average sale value, and what was the intraday profit for that share that I have sold among the 58 shares. What was the intraday profit, and what was the long term capital gain and the short term capital gain. So I don't have any short term capital gain in this share, but I have a long term capital gain. And what is the uh, total profit and loss for the selling from the selling of this share between these two times, 1st April 23 to 31st August 24. So this is actually the summation of these all these three profits: intraday, STCG, and LTCG. And what is the percentage return that I have here? So the percentage return is again calculated based on the total or the average buy value and the average sell value for the share. Similarly, for the mutual funds, we have a sale of 5.87 for the flexi cap, and here only we have STCG. As you can guess, we won't have an intraday for the mutual fund sections. So we would ideally have only STCG and LTCG, and what is the percentage return that we are having, and the cell with the green color is actually showing the overall percentage return for each of these categories. Let's say for mutual fund, what is the percentage return, for what is the percentage return for equity section. So it will calculate what is the total profit and loss, and what is the total amount that was invested into this sector. Now, if we have a quick look at if these quantities are coming as what is intended, so let's go back to the ledger and see what was the actual amount of Infosys shares that we sold in between these two periods. Now, let's say uh, we try to look at the Infosys shares that were sold from, uh, let me check the date, from 1st April 23 to 31st August. So I had sold some 23 shares here, and I have sold again Infosys 25 here, and again 10 here in between these three dates. So yeah, I have 58 shares sold, so that number is probably correct. You can also cross check this on your own. Also for the the shares that were sold, you can probably have a quick check for the intraday sales. So I purchased some stocks for Infosys on 4th July, and I sold some stocks for Infosys on 4th July itself. So the total quantity is matching for both the purchase and the sale. So you would expect that whatever 25 we have sell here on this date, it's actually the same quantity that we have purchased on that same date. And if you look at the summation of this, it's coming out to be minus 1000. So the sale value is higher. So we have made a profit of 1000 in intraday trading from uh, equity sales of Infosys shares. Now, if I try to look at the other sale that we had done in this time period, the HDFC FlexiCap. So I have sold some minus 5.87 shares, and this was sold on 31st August, and I purchased the shares on 22nd December. So it's less than a 1 year period. So we can expect this share to be, this sale to be classified as a short-term capital gain. So we have a short-term capital gain loss of 135 here. Now if we also try to check if the quantity that we have here is uh, if the numbers that we have here is matching. So let's say I have sold it at this price, so we can take this here. So this is my sell value, and I have bought the shares at a price of, so I have taken this share at a price of, let's say, 2010. So if I try to find the difference between the selling price and the buying price, it's coming out to be 135.01, which is exactly what we want. Now this quantity is negative because the buying price is higher, so we have a loss in this trade. So it turns out that these quantities are, or these figures for the capital gains and the trades are also matching. Okay, let's, as an additional check, let's validate if this figure of 6330 for the long-term capital gain is matching for Infosys trade. Let's again go back to the ledger page, and we will remove this data. Now let's say I have sold some Infosys sales of 25 on this day from the intraday trading. So we have to offset this 25. So from 58, if we offset 25, we will be only left with this 23 and this 10. So 33 shares we have sold, and these 33 shares will be offset from the first purchase or the first buy orders that we have placed. So as you can see, the first buy order was of 50 shares at this price. So it can you be used to offset these 33 shares here. So let's take the cost price of these 33 shares at this rate. Then take the sell price of these 33 shares. Now if we subtract, so we see the total profit on this trade is 6330, which is again validated in this region using this formula. So that's all from this video. In the next video, I will try to show you the actual implementation of the scripts that you need to do in order to make this, uh, in order to get this portfolio results for each of these trades.